Welcome to our subscriber-only special edition of Amusing Perusings. In this bonus episode, we hear deep insights from our peers and experts as they dive deeper into their advanced knowledge and experiences. Join our host, Michael Hobbs, real estate investor, entrepreneur, and chief appraiser, as he discusses perspectives that are impacting the industry and elevating how we analyze assets and improve valuation skills.
Hey friends, welcome to another exciting, engaging, and in this case, educational conversation that we get to have with one of our industry peers. The wonderful thing about the podcast is we're always so blessed and so grateful to have peers just share their time in and around and through the industry, give us a perspective of what's available, what's possible, and maybe even could be probable for your future, or definitely not, however that may go. I'm Michael Hobbs. I'm the host here at Perusings, Appraisers on Purpose podcast, and I'm excited to have Greg with us as a guest. Greg, thanks for joining us.
Sure. Thanks for having me.
I really appreciate it. I appreciate it. And friends, remember, it's your generosity, it's your thoughtfulness of continuing to share this with your peers that allow this podcast to continue to make the difference that it does. Appreciate all the feedback. Thanks for the messages. Thanks for the suggestions as well. It's always great to hear, different people. Everyone has some slightly different path in and through the industry. It's great to get that understanding and just feel free, do what you can to make a difference by not only subscribing to the podcast, but liking this one and sharing it. So with Greg, the opening question everybody wants to know, hey, were you born this way, or how did you get into the valuation and appraisal profession?
Well, my mother was in real estate, although that really didn't have much to do with it. I was in South Florida and loving the weather and the area and looking for a career, if you will, and heard a little bit about appraising and latched on and thought that was a great deal. Yeah.
So was your mom like a managing broker, or what was her role?
No, she was a broker, GRE, at a real estate in Pennsylvania. But
okay, interesting. So you grew up around the whole real estate schedule and interaction with clients.
A little bit. I think that definitely, had to have been something that left the door open. You hear about appraising, and it wasn't completely foreign to me, obviously. So yeah.
Yeah. And it didn't entice you to become a broker?
No. I think there'd be a short and sweet answer, I think, of why I'm an appraiser. I'm not a salesman.
Oh my gosh, I love that. That was a fantastic answer. No, just done. That's not the case. Absolutely not there whatsoever. Wow. So you grew up around it. Did you go to school to study it as well, or did you clearly stayed out of brokerage? So you weren't like buying and flipping homes back when you were in your teens or anything like that?
Nope. Didn't do any of that stuff. I honestly, when I made the call to switch careers effectively when I was in Florida to be appraising, I went straight in and did the business school coursework to get the trainee credential and off and running.
Wow, that's fantastic. So you also, like me, it sounds like were a career changer. So you started out in something else, and then you got into the real estate profession. What were you doing before you got in?
I sold cars for several years.
Okay.
And before that, probably the first, I don't know if you want to call it a career or not, but I drove tour buses coast to coast for about 6 years.
Really?
Up in central Pennsylvania, I drove Penn State athletic teams all over the place.
That's cool.
Had Joe Paterno on my bus, drove him to the Meadowlands a few times.
Wow. Coach, holy smokes. So I'm thinking, a little old school reference like planes, trains, and automobiles. You were the motor coach driver.
That's it.
That sounds like a fun thing to do because you were not much older than in this case, Penn State students that you were driving around.
That is correct. Yep. I was, a couple 4 years older, maybe, give or take. And taking the athletic teams around. I took and a funny story, the Penn State women's lacrosse team told them that they would only go if I drove the bus.
No kidding.
So I took them everywhere they went for the couple years. It was excellent.
That is a great experience. So is that something you kind of graduate out of, or do you mature out of it, or how do you make a pivot from being that guy?
So the owner of the company, funny enough, when I first started working there, very young. I mean, I don't think I was 21, 22 maybe at the time when I first started driving an interstate. That's not really heard of at that age and in those buses. But the owner told me, he's like, you remind me a lot of me. The first 2 years, you're going to love this. The next 2 years, it's going to be kind of like work. I'll
Oh,
get 2 more years after that about you. And that's about how it played out. 6 years.
oh my goodness. Well, you kind of just ran with that. And then from that, did I hear you say you got into the car industry?
I did. I've always been the car guy. I love
Okay,
cars and
okay.
stuff. And I sold Fords in Florida at a very
Wow.
large joint. I was there. I sold there and in Pennsylvania at one time, but probably a total of 4 or 5 years I did that. And I think that's where maybe that no came from being a broker is, yeah, I'm not a
Oh.
salesman.
Well, I was kind of thinking when you said you didn't want to sell real estate, I'm like, maybe I get it. But I mean, then you go into car sales. But I mean, if you're a car guy, it's a little different because you're
Yeah,
actually talking about stuff that you probably like.
right, exactly.
Oh my goodness. But you got out of it.
I did. I did. That was honestly, I think my quote to that was never working 8 days a week again.
So then you go and join the appraisal
I
profession.
did.
So,
And maybe the independence of that was a little bit of the allure as well. Yeah.
wow. I can appreciate that. So you mentioned Penn State, but then I heard you mention Florida. So did Penn State relocate you to Florida or what happened?
No, I relocated myself.
Yes.
After I completed, once I decided I was done driving buses, and honestly, the roads now are worse, way worse now than they were then. But
Yeah.
that's really what drove you out of that is enough's enough.
Mm.
I had some friends that had lived and moved to Fort Lauderdale, so that's I followed them down to Fort Lauderdale and
Sounds
looking
like a
for
terrible idea. You're what, in
well,
your 20s? Late
yeah, I
20s
was
and you went down to Fort Lauderdale?
well mid-20s, but yeah, I went down and
Mid-20s.
that's how I got into car sales. Is okay, I went down there with no connections, no job aspirations whatsoever, and wanted to do something other than what I was doing, and
Yeah.
hopped into car sales because I again like cars.
That's there are a lot of worse places in the United States to be in your 20s and getting paid for work. That's fantastic. So you made the shift then. So it sounds like you started out in the industry in South Florida.
I did.
Good for you. Good for you. And where did you start out?
I was in Fort Lauderdale. I mean, it was a Davie area, but
Oh, Davie, sure.
basically appraised all of Broward County, some of Dade, and some of Palm Beach.
Oh, okay. Yeah, I mean, for those that know South Florida, like that's pretty much where everything is. Broward, Dade, you name it.
That's where
That's
all the congestion is. Absolutely.
all I can say is I was down there about 2 months ago for a Bloom Growth Coach quarterly meetup, and I was shocked because I hadn't been there since COVID. I was like, this traffic's atrocious. I mean, it wasn't great before, but I was like, I don't feel like I'm in Florida anymore. Like this, I feel like I'm in LA or New York or Chicago or something. I mean, they were that migration to South Florida is real.
Indeed. Like I said, I just was down in Key West a couple weeks ago and drove down from here, and I can attest the traffic is way heavier than when I lived there for sure.
Yeah, it was like standstill. I was like, holy smokes, what's going on? Like, I'm just going from, where was I? I was in Lauderdale, headed up to Delray Beach. And I'm like, this normally shouldn't take that long. They're like, no, this is normal. And I'm like,
Yeah.
the new normal. I guess I'm just out of touch. So be it. Wow. So did you start out with just kind of the typical single story properties or did they put you right on the waterfront?
There was no holdback. I mean, it was, I worked for my first supervisor, worked for that person for about 6 months or so, and came across another opportunity for a different supervisor. So I switched over. That guy was excellent.
Yeah.
And he did all kinds of properties. He was an MAI, so he had all kinds of commercial work as well.
Oh, okay.
And early on, I saw the office. You had your residential people, you had your commercial people. There wasn't a whole lot that did both. He obviously did both, but he did a lot of big high end property. Fort Lauderdale's mostly that anyway. But yeah, I was out doing waterfront stuff right away and learning, how the 50-foot snowbird lots were being bought up the waterfronts, and somebody with a 150-foot boat, needs to buy 3 lots so they can park their boat in the backyard. Yeah.
That's such a different world. That's such a different world. What, from that standpoint, when you said he was a great supervisor, when you reflect now, obviously years around the industry, what was it that you experienced that has you say that?
Just his knowledge and experience. He came from an appraiser, so his father was an appraiser. So he was well seasoned, knew everything. And I think some of the questions I had before arriving to
Yeah.
work for him, were answered pretty quickly. He was like, some eye-opening type of experience, and yeah, it changed my life, turned me into an appraiser.
That is amazing. And then you mentioned you moved from one supervisor to another. What was different with the first supervisor that you found so much more beneficial with the second supervisor?
The thing, I guess, that got me out, and I don't know if this is common or what other people's stories are, but very hands off. Didn't really feel like I was being supervised very well, and had more questions. So, I actually, it was a connection through that person that I worked there that introduced me to the other guy. So it all worked out good.
Got it. And so you mentioned he was an MAI, so you were doing both residential and commercial properties?
I was not. I was sticking with residential.
Oh, okay.
I know once I became certified, he was eager to have me go down the commercial path, and I had up to that point I had helped him on some as a trainee with small apartment buildings, and wasn't my cup of tea. I think I told you before I of all the appraisals or all the properties I didn't like to appraise, multifamily, it's kind of like, oh boy, I was actually worked on those. Once I did the small apartment buildings, that made those multifamily 2 to 4s easy. That was great.
I completely agree with you. I mean, once you've done 71B, you're like, this 2 to 4, like I can just zip through that baby. I mean, they're just a little bit, it's kind of like an older brother, It's not that far removed from the other.
But yeah, I think I just specialize in residential mainly. I like to see things through. I don't leave anything hanging. And when I start something, I like to finish it. And I think the time frame of completing residential, it's start it, finish it, move on to the next one. Whereas commercial can last for weeks, months, depending on what it is you're working on.
Yeah, that is definitely the case there. Definitely the case there. So how long did you stay with that designated appraiser?
A little over 2 years.
Oh, okay. Got it. What happened after 2 years?
Went out on my own.
Ooh, wow. Oh, wow. Yep. That entrepreneurial spirit kicked in.
That's it. Yep.
How'd that go for you?
Good. I did that for 2 years. And then what relocated me back to the Northeast was family. I was the only one that was down there, and family was expanding through my sister, and decided to come back up. And that's when I left the field. Oh,
wow. Gosh. So the glory days of the field are just a distant memory.
Yep. And it's kind of ironic. It's funny, you talk about geographic competence and such, being very familiar with South Florida. It's like, okay, I just moved to Pennsylvania and started appraising. It didn't click with me that you could just do that. And as we talked before, it's now having worked on the inside and the banks and such, like, yeah, you could absolutely do that. That didn't occur to me then, but nonetheless, it got me looking for other positions where I wasn't starting over per se. So I started working for appraisal management companies and then onto the banks.
Oh, okay. Wow, that's quite an experience. So you moved back for family and you head over to banking first, or the appraisal management space?
Appraisal management companies. Yeah.
Oh, wow. And so were you in appraisal capacity, or were you on a staff capacity, or were you over on like the QC side or processing?
Totally QC, doing reviews on incoming appraisals. So that was my first, glimpse of seeing, wow, you really see a variety of appraisals, how they're completed, various appraisers and stuff.
Man, that's something else. And obviously you went to an established firm. So what was the process of getting you acclimated to the review side of things when you'd been in the field?
Well, I guess they had several different clients, obviously, and the first one I was working at was set up, to work with specific ones, not just anyone. So you're really catering to the way they're wanting their appraisals done, kind of a thing. So I worked quite a bit with people there at that bank. I don't know if I should mention names or not, but
a lot of people do. I mean, it's back then. Yeah.
I think one of my first connections bank wise was Chuck Schmelzley at Citibank.
Really?
So he was a guy that, I got it on that account, and I was looking at, just reviewing appraisals and things, and through the assistance of there are a few other appraisers, credential appraisers at the company that, help you along what they're looking for, what to do. But it got to the point where, and I loved it. I mean, I got to the point where Chuck, all he had to do was call me and give me a loan number, and I'd open it up. I could see what's wrong and, get it taken care of.
Hey, that's important to be able to resolve things quickly. It makes a big difference. Goodness. And so have you, with that experience being in the AMC world, were you primarily just focused in that local market, or did you develop the ability to review regionally or nationally?
Yep, that was straight up national review. So that was my first experience looking at coast to coast and really get acclimated to the goings on of now it's not just little niche markets, it's the country. So
Yeah. Wow. Um, I know I can think back sometimes I've had that kind of experience. What was one of those first memories that stood out when you're no longer in that more local market or markets that you're familiar with, and suddenly you're in other parts of the country and it's like, oh my goodness. Like, what was one of those that stood out for you when doing review?
I don't know if I can recall any one particular, but I would say it's areas like
Yeah.
Tahoe,
Yeah.
and especially if it's someplace that I had visited,
Hmm.
it's that's like wow, okay, just like zoning ordinances and
Yes.
being able to build and how long expected lifespans of properties. Not
Hmm.
very long because if somebody wants to build one, they can't mow down trees, so they'll go buy something that might be 10 years old, cut it down, and build a new house.
Isn't that shocking? I mean, you're kind of like, what? I mean, if you're in that area, it's commonplace. But if you're not, kind of like you mentioned the Florida reference. Well, my boat, and they're not a boat when they're 150 feet; they're a yacht. Well, my yacht's 150 feet, so I need at least 200. I mean, I can't just
Yeah, I
have.
don't park it that well.
Yeah, come on, it's not that good. Wow. And a number of our listeners obviously are on the lending and or AMC side, but a lot of people are or have stayed in or primarily in the field. They don't really have that same appreciation for making the switch like you did. What did you recognize being on the review side that you wish you would have known when you were in the field?
I think, out in the field, before having never been in the bank or whatnot, you learn how to, what you're looking for, the research, all that stuff, completing the form. It really is, filling out the form is not appraising. You've done all your
Yeah.
work up to that point. Trying to communicate what it is you've done. Once I get into the bank, it's like, wow, okay. You think of all these revision requests you get, and it's like, this is stupid. But you get
Yes.
into the bank, it's like, now I know why they want that.
Uh,
And then it's no longer then it's just a not only a quick fix, but probably incorporate into the report itself. But understanding why things are needed and where that appraisal is going and who of the many people that have to defend the value and their
mhm.
position on it.
And were you in review during in the review space during the time of the country's dip into the glory days of thinking the world was coming to an end? We're like, oh my gosh, I think this is going through a great financial crisis.
Yeah, the bubble burst. That was right about the time I transitioned out of the field into the appraisal
Oh,
management company.
holy smokes! You really were in the glory days of property valuation
Right,
events.
and it was hand over fist. There was plenty of work, and I've always said, yeah, and I think what I think of that, people like, has work been steady? Have you been able to, be a, no hit to your appraisal? I'm like, yeah, my entire career has never gone down. Whether there's a hiccup
Hmm.
front, backwards, word in the economy, there's always work for appraisers, and if
Yeah.
it's not originating, well, the next thing you know, you're getting calls for servicing. And the lender's the same way.
Wow.
There's always appraisals coming in, whether if they're performing,
Hmm.
servicing, great. If they're non-performing, now we're having to find where we are in the what our risk position is on that property. So it's uh, could be getting appraisal once a month, in that situation. So
Yes. Oh, that's something else. How was the experience, being with a larger AMC and literally, I would say you're pretty close to the front lines compared to the more traditional experience of someone kind of being in the field and depending where they were geographically, what the impact was. How was it for you?
I actually enjoyed that because you learn quickly from working with the banks, having that direct contact with those guys, what's going on with the revision request from them. I actually, one of my favorite things of any role I've ever been in, honestly, is the ability to walk an appraiser through the problem. If they
Mm,
have a revision request, they don't get it, they don't understand it, I don't know why. I all day long love picking up the phone and discussing that with them and helping people out.
yeah. Oh, that is wonderful. And then, did you all, as a team working obviously on this, did you all have your own little spidey sense of kind of where things were at and about when the bottom really was versus when the market, when the pundits actually started talking about where the bottom was? I know that was an interesting set of conversations for some people going through those times.
Yeah, I think the roles I've had probably didn't get into that. Mine's a day to day, just like an appraiser. The value is what it is today, not tomorrow. Yeah, the market could be crashing. Yeah, that's great, but we're focused on today. Get into capital markets and things like that. They're worried about that. They can sit on warehouse lines for 30 days and they can lose a lot of money, before they send off to the investor in that time. So that, there would be some opportunities to work with them when they have questions, but then that just all comes down to data and having access to good data.
Yeah, that completely makes sense. That definitely completely makes sense. And then, again, a number of people don't have the experience of being on the review side. How is, the more you're in review, obviously, the more experience you gain. How do the roles and responsibilities change?
What do you mean? How do you mean?
Well, when you started out, you didn't know anything.
Right.
And you've been there a year or two, three, you gain more experience, you gain more competency. I assume your responsibilities changed over the time you were there at your first AMC.
Yeah, certainly. So I quickly, I'm a fast learner.
Oh, okay,
And,
good.
First, I guess the first step is when I was first, showed up at the place, I had people, you reach out to and ask questions. So the first step is, other people inside the company, reaching out to you because they realize that you've had experience with that or whatever.
Yeah.
And then next thing you know, you're becoming the main point of contact for the client themselves, the banks and things. Had opportunity to create some efficiencies and get into more managerial type roles, supervising for sure.
Oh, I got it. And then, with that kind of opportunity to continue to advance professionally, what has you consider staying at one place versus moving to another?
Honestly, for me, it's the ability to still contribute in a collaborative way, in a positive manner.
Mm-hmm.
The AMC, I was there for about 4 years or so, and then went from there to work for a bank, and was at that bank for 5 years. Started out at that bank as a reviewer, and had worked my way up to where I became relied upon by pretty much many, every department, several people in each department, but
Yes.
had been involved in the process all the way up through to delivery.
Oh man, it's something else. So what was the biggest thing of coming into awareness, or like, gosh, I didn't know that before I got here, when you go from an AMC actually to a lender?
That's the connection then to the investors, the GSEs, Fannie, Freddie. Now instead of, it'd be like at the AMC, I'm in communique with the bank and their management and reviewers on what the issues are. Once you get into the bank, well, now that communication's up with the AMCs or with the GSEs, and it's good opportunities and good experiences too, working on their initiatives. So it really can be that collaborative point is up one more notch. Working directly with them on future improvements and things.
Goodness, that's quite an experience. So you go from being on the review side for the AMC to going over to the lender, and then, like I said, working in a collaborative environment to help move things forward. Was what type of role did you step into when you went to the lender?
Initially, it was just straight up review, but eventually it evolved into managing the operations side where we're procuring the appraisals. So then, working with the AMCs, fielding all the communication back and forth that way, holding to a quality standard and meeting with them monthly, that type of thing.
Wow.
Eventually evolved into managing the review department as well.
So your desire to go into appraisal got you started along the path, but it seems like your natural abilities or trainings along the way helped you continue to get new roles and responsibilities, because that seems like a far cry from measuring a house and taking photos.
Exactly, and I think the way the industry's evolving, I think I've evolved with it. But had I not left the field, I mean, I have friends that are still in the field, and and they're either staff appraisers or whatnot. They're not putting your name out there and working directly with clients anymore like it was back then. But being able to evolve that way, and I say too how I've never had a down year. It's being able to ride the wave and keep on going. But yeah, it's been excellent to push knowledge forward.
Man, that is quite an experience to be a part of that. And is your learning almost all on the job, or is there some like special lender school that people go to, or AMC Academy to get up to speed on these things?
No, in all reality, each time, in all those positions I worked myself into, they hired me for the knowledge I already had. And I would say most of them, a good many of them, I brought more to them. I brought a knowledge base to them that they didn't particularly have, or expanded what they had. Went in that direction of understanding appraisals, because before that, I mean, I think there's still some miscommunication and a little misinterpretation going on. I think that'll always occur. But at the time, those positions, most of them, I brought the appraisal perspective into their bank.
Oh, that's helpful to know, because one of the typical forms of feedback we receive are people kind of asking some general questions, and it's for someone like yourself who's been in and around multiple segments of the industry, you actually have the ability to answer those questions versus others who are kind of like, I don't know, I just talk to people over there. Like the idea that it's tennis and they're on the other side of the court.
Yeah, and I found myself in many a time in a situation where somebody internally has a question about an appraisal or some assignment result that's on it, and they want to go back to the appraiser and ask the question. And numerous times I'll get in the middle of it. It's like, no, you don't need to go back. It's already there, right? Here's what this means. This is what this says. It's it's all there. Here's what ask them, what is it you want to know, and I can point them into the appraisal where that is already addressed. So hopefully,
yes,
I reduce some revisions to some of our appraisers out there, but.
The market right now is tough for appraisal companies. Many companies are having a hard time getting enough work with the same marketing they used to. Is your company struggling, having a hard time getting new customers, or getting additional work from existing customers? The answer to this problem is easier than you think. Do more business with the people you already know. Over 10 years, the average U.S. appraisal firm meets over 17,000 potential customers. That's a lot of people you could be doing business with right now. But it's a big problem if you don't have a proven process to communicate with them. StoryLex turns this problem into an opportunity to grow. Our advanced AI marketing tool can rebuild your contact lists and harvest long-forgotten communications. Imagine reaching out to everyone you've ever met with just one click. For the cost of 1 or 2 appraisals a month, StoryLex helps you reconnect and market to people who already know you, like you, trust you, and want to do business with you. Act now by contacting StoryLex today to turn your business growth dreams into reality. Email appraisal@storylux.com. That is appraisal@storylux.com. And now back to part 2 of the episode.
Yeah, that's nice to hear. I would say 2 thumbs up from my standpoint for you. Definitely appreciate that. You being Mr. The interpreter, maybe,
right.
Kind of instead of going to Google Translate, hey, can you translate this from like English to, I don't know, Spanish?
A little bit,
yeah.
yeah.
Can you interpret this for us? You're like, yes, I speak appraisal. Oh my gosh. I don't know. Maybe you need your own chat GPT. You could have it the appraisal interpreter.
Well, we're going past that. We're going to be an AI before you know it. We're halfway there already.
Yeah, that is definitely the case. That is definitely the case. So when your role in the bank and in the mortgage processing side of things, how does that role and responsibility continue to expand? Because from someone on the outside, they don't have any sense of all the different moving parts for the operations of a lending and mortgage operation.
For how my role would expand, or how?
Like when you look at your career trajectory and the different roles that you can take on. You obviously pointed out you're a fast learner. Someone else who's listening to this, they're kind of like, hey, that's nice. How can I apply that to my life and maybe my future?
Yeah, I think inside the bank itself, there's a finite path for an appraiser to go. There's not, we're not underwriters. We're not, it's not there's not a whole lot further to go inside the bank other than being that expertise in there.
Got it.
To learn that as for a field appraiser, someone who's continued to interested to be in the field still.
Yeah.
I'd just say, yeah, if you know banking people, talk to them, ask them questions, ask them what they think. What's your biggest misunderstanding or question about an appraisal, or what frustrates you about an appraisal, and you could probably help them. Having that conversation, you could probably do what I've been doing from the inside and
Got it.
educate on both sides.
And then when you look back over your professional career to that point, was it any particular activities or strategies that you employed to create your employment growth and promotions, or was it people just looked at him and said, "Man, I just really like that guy"?
It was definitely great collaboration, and that is key. Good communication, but staying abreast of the industry is huge. And I think probably one of the biggest things that put me in a position of being more relied upon was getting involved with the Industry Advisory Council with the Appraisal Foundation.
Oh, really?
I had attended that a few times, and when you go to that, people that sent you, then you go back and talk about what you talked about and what's going on, and it become more reliable, more relied upon.
Yeah, that seems quite valuable. For those that don't know what IAC is, can you share a little bit about that?
Yes, it's a group within the foundation that meets on probably a quarterly basis or so. Made up generally, it's they're members, and you can join, fill out an application to join. But it's generally speaking, high level appraiser, your appraiser peers, chief appraisers from various institutions that can come together and collaborate on kind of what we're talking about here. What are you seeing? What are we seeing? What's the direction of appraisal, the direction of lending, the direction of valuation, and then how that, think it's like a think tank that can give guidance to the foundation for anything all the way up to, suggestions for USPAP and, education qualifications, all that, everything. It's a excellent group.
When did you first get involved with that?
Oh, it was a while ago. I want to say it had to have been somewhere around 2012.
Oh, wow. So and one of the things that community creates relatedness, which creates opportunities.
Yes, and I still have peers that I met through that organization that I still speak to today. I only went to, probably a couple years. If anything, and probably switching jobs or whatever didn't continue on. If I had to do anything over, I would have maintained, keep on going to that. In fact, I still to this day, contemplate, re-upping.
Oh, I love that. That's great. And did I hear you say that you don't have to just be a corporation to join? You can actually attend as a person?
Yep. And I think you can, when I first went, I showed up as a guest. So I was a gentleman from the company I work for, George Van, was the chair of it at one time. And he invited me out. Van. Yeah. Great guy. Another right there with Chuck Schmelsley. George Van was an excellent mentor of mine. Yes.
Mm-hmm. Oh, that's fantastic. So you eventually had an opportunity to leave lending. How did that come about, and where did you go to?
Well, I honestly, I've had, was kind of still in lending, but I left the one institution I'd been at for a good 5 years or 4 or 5 years for, again, you expand opportunities. You get to know people and try. There's potential opportunities out there for other things, avenues to build upon what you're doing. So I'd gone into a company that would have been more servicing related, that was working with Fannie Mae, and I had already been working with Fannie on some other things. So, went that direction, and more or less, I gravitated back into banking, but
Oh, really?
yeah.
Got it. So when, as you gain that type of level of relatedness, and obviously attending things like the Industry Advisory Council, you develop as far as you have, and then you change for roles. What motivates that type of change? I mean, is it like, hey, I want to live in a different part of the country? Is it like, hey, it's just about the money? Is it just about the people? Is it just about the opportunity? Like, because some people have been in the same I'll call it a kind of lane of the work that they do for a long period of time, and this is foreign for them.
Yeah, for me, it was more something new. You know, it's like, okay, my job's done here. What's
Mm,
next?
got it. Yeah, the what's next
Yeah.
approach.
And
Kind of
usually
like a medic.
I didn't go anywhere without it's like, oh, that's an interesting thing. Maybe I'm gonna go do that. You know.
Yes. Yeah, that's a fascinating way to go. To like a good medic, like, hey, my work is done here. Let me move on to
Yep.
the next person or opportunity, as they say.
Yep. There are plenty of people that be completely satisfied. I've had great jobs, but I also like to take chances and why not try something new, to further contribute. I'm always constantly, how can it's honestly funny enough, less about me and more about how I can contribute. Where can I go next that would be of great benefit?
That's a nice perspective. And then, obviously, over time, access and technology has changed. But through those years, was that an active pursuit, or was it more casual, or just be catching up with somebody and it's kind of like, hey, what are you up to? Or how did those new opportunities show up for you?
Really casually.
Yeah, say a little more about that if you would.
Again, maintaining contact with everybody and when I made that jump that ship the one time was of someone I had actually met through IAC
Oh, okay.
wanting to there were it was a collaboration of a couple different companies. They're moving forward with a good product and working with Fannie on that. And I guess I already had some discussion or some contact with Fannie and probably thought I could bring something to the table there and it sounded good to me and that's sounded like a good next move.
Wow, that's great. Well, what type of responsibilities did you move into?
It was a leap. It was a change to servicing
Oh,
from
wow.
from originations, and
Yes.
really just more of a quality of product role.
And then what does that mean? Because I mean, you're in the industry, you know what that means. But for people that, were like you back in South Florida, they're like, I don't know if I know what that means.
Well, the company's developing something that Fannie would rely on for value, and
Hmm.
it was a they built it, and it was a fantastic product. They put it up against some other products post closing, and turned out to show came in stronger than than the other products they had gotten. But it's to contribute into that product to make sure it does come in on an accurate value and stuff to work for the investor, obviously. So
Fascinating. And I think that's a perspective as you shared because you've worked in multiple lanes in and around the industry. You have that understanding about the multitude of parties that rely upon the work that gets done versus someone who's just in the field has a sense that there's other people out there, but they don't understand that long line that's there. And now you're talking about being over there and servicing. Share a little bit about like where that fits and how integral that segment is in the mortgage space.
servicing.
Yes.
So that's it's all about data and it's all about technology. It's ever since the day one in appraisal, technology's been getting bigger and bigger and bigger, but and more of a contributor factor. But with servicing at that time, it was you have loans out there and they're performing or they're not performing. They're being serviced. They become non-performing when now they're a liability to somebody. Agency, the banks, both. Um, Investors always want to know and need to know where their risk position is and everything. So you get into the servicing aspect of things. It goes to the point of where maybe they have to go foreclosure, they have to take the property back. They need to know what they're going to lose on that property, and sometimes they need to know that before they make decisions or help them make decision.
Mm,
Um, you got a
interesting.
borrower who's struggling to pay but paying something,
Hmm.
and the value of the property is nowhere near the debt. Maybe they'll work with a borrower. They'll be more apt to work with a borrower to collect on that versus somebody who's defaulting for 12 months. Property
Yeah.
is worth more. They can clear the note. So they require a valuation of some sort to know that, and they need to know that capital markets people and
Mm-hmm.
And those are the real users of that product. Need to know that on the fly to be able to make business decisions.
Got it. Got it. And then in your role and given your background and having worked in the other segments of the industry that lead into servicing, how are your skills regularly utilized in that new responsibility?
Um, it was still mostly procuring the valuations and the
Oh, okay.
expertise of the people providing those values. My contribution, I was that much. The technology, the technology, I'd say, and the thing I was working on with them, the technology piece was the biggest
Oh, I see.
that they built to absorb everything that was going in to make it reliable.
Wow. That's quite an undertaking to have that type of technology built, as opposed to just rows and desks of people moving paper and files, as it had been in years gone by.
Yep. Yeah, I mean, everybody as an appraiser in the field, I think someone the other day asked me about, what data, I like, whatever. I'll do a plug for Redfin, even though,
Yep.
they just got bought out, but I've had great success with Redfin as far as data goes, and I love it because
Yeah.
it's free. Hopefully it's
Yes.
still free and stays
Yes.
free. But you know, pretty direct link to MLS, but I've used that and I've used RealQuest, SiteX, all those. But it's amazing how you really got two sets of data. You got public records and you got hands on the ground, MLS or whatever. But what the agencies put together, Fannie Mae in particular with Cloud Underwriter, that is a machine, and there's tons of data in there. All the data you can visually, I can visually see the leap from the data that's being collected into that, plug in a little AI, and valuations are getting pretty accurate digitally.
Yeah, it's with more data becomes more ability
Yep.
to properly assess and predict. So yeah, that is it's quite the experience.
And that's really
Did
what
you?
appraisers are. I mean, I think appraising is data collecting. It's
Mhm.
in your neighborhood, knowing the region, but it's collecting the data on that and reporting on it.
Yeah, that's a big one, and importantly, it's maybe it's collecting, but more than that, it's actually interpreting.
True. Yep. Absolutely.
Yeah, it's I mean, collection is an interesting experience, but the the person who's capable of actually taking information and turning it into something usable or insightful, that's valuable.
And then can the third ingredient, communicating it, collecting it,
Communicating it.
collect
Oh
it,
my gosh,
interpret
what an
it, and
amazing,
communicate it.
so surprising. Can that actually happen? Wow, that is something. Did you get involved in the development of the technology, or were you more just along with the role as technology was being developed?
The with the collateral underwriter, I had the opportunity as working with a lender that worked with them to be involved with seeing that pre-launch and having some input, which was excellent. And it put me in the spot of really understanding where this data is coming from, trusting it, knowing it, and knowing it's a tool. It's not a this is it, yes or no. It's a
Mhm.
tool, so it's still your word interpreting. It requires an operator to be able to look at that and interpret and understand what it's telling you.
Definitely can appreciate that. What were the primary accomplishments for you while you were in that role?
Well, just contributing there, that was probably just a byproduct of being in the management spot at the bank. I wasn't on any kind of direct engagement with them per
Hmm.
se. I think it
Yeah,
was the group of us. It was everyone at the bank was able to, in our department, was able to contribute in that fashion.
and then you mentioned that your experience in your career is you're kind of there until you, like a medic, bandage up the patient or get them rehabilitated and up and going. What was the fulfillment of your time there before you went on to your next opportunity?
I think it got to the point where um, it's like a cycle. You know, it
Hmm.
recycled, starts recycling what's going on, and it's funny, because I've been to several lenders,
Yes.
and everywhere I've been, that seems to happen. It's just like it goes up and then pff, you got to start over again or rebuild or whatever. I don't know. I have the longevity of a solid valuation department
Yes.
is not common, I don't think.
Mm.
Every place I've gone it seems like it's been new. It's like, well, who's been doing this before I got here? Somebody, but who knows?
Yeah, that is totally the case. So you get to both bring in some perspective as well as maybe carry the rebuilding flag, is what I hear you say.
Yeah, and I think organically, if you don't leave a place, you're going to end up rebuilding anyway.
Mm.
So then, and that can be through acquisitions or whatnot. That's what happened at the place I was at. Was went from a bank holding company to a non-bank lender, so regulations are different, and
Oh wow.
new ownership, new everything. The things get revamped, and acquisitions and banking go hand in hand.
Yeah, that is been around long enough. You're definitely going to see enough of this.
Yep.
You mentioned going from the regulated to the non-regulated space. Share a little bit about that, because that's something most people are not as well informed of or associated with.
Yeah, so they're both regulated, but the non-bank lenders are not as nearly regulated as a bank holding company. Most lending, if I'm not mistaken, is all non-bank lenders now,
Hmm.
but the bank holding companies are held to a higher standard.
Yes.
Um, I've been in places where they've required certified credentialed appraiser staff in some of those places,
Oh, really?
by the regulators. Um,
Oh, wow.
but yeah, I guess to protect the deposits and everything else, it's a different engine, different machine for sure.
Yeah, it definitely seems that way.
So then when you go, into a non-bank non-bank lender, then some of the how do you put this? How do I go about this without uh, less not as a little loose? How about that? Things loosen up a little bit.
Well, I mean, we do a lot of work outside of the, FRT space. We do a lot of work in private lending and non-bank lending. And, they don't, depending on what type of non-bank lender they are, I mean, they don't report up through the OCC. They don't have examiners coming in. And depending on, even some in particular, huge, they set their own quality parameters. They have their own processing. They're not selling their loans in this case to the traditional secondary market that therefore requires the backing of a quasi federal entity. So I mean, that's more power to them. I mean, they're in business to make money, and they pick and choose the clients they want to work with. So non-bank lending is another option, not always as inexpensive as those with the federal guarantees, so to speak, but opens up a lot more possibilities for borrowers.
Yep, and I think great point. The nuances as an appraiser in the field, knowing the difference between all these different clients,
Mm-hmm.
that can get confusing. If maybe you think an appraisal is appraisal, but does who the client is very important and a major concern before you even get started. But if you're a lender that's going to any federally related transaction, the agency, whatnot, yeah, that's pretty standard. And private lending is a whole other end of the spectrum, not the same thing at all.
Yeah.
It's a shorter term, quick turn times,
Mm-hmm.
quick this and that, and it's it could be even internal. You have opportunities for internal decision making and valuations.
Yes.
So it's just they're definitely night and day. It's can't just jump from one to the other without a little digging, I guess. Yeah.
No, I definitely appreciate that. And you distinguished between, say, private lending versus non-bank lending versus lending. How do you, given all the experiences you've had, for a layperson or maybe someone who's primarily in the field and hasn't been exposed to this, how do you easily differentiate between the three? I mean, the one's pretty straightforward. Kind of everybody knows the far end of full regulation. But as you move back from that, how do you describe the differences?
How would you identify, or how would you?
Yeah, lending, regulated lending versus lending, the non lender and the regulated non-bank lending, and then private lending.
Yeah. So as an appraiser in the field, I'm
Well, just explaining it to them. Someone's like, "What do you
okay.
mean? What's the difference?" I'm like, "Oh, they're totally different."
Yeah. So I would say that what 80%, 75 to 80% of all appraisals for GSEs, and that's going to be your federally funded transactions, FDIC,
Yes.
anything that says Fannie Mae, Freddie Mac, VA, FHA, those types of deals. Those are pretty standard. The requirements
Hmm.
are pretty standard. That's what probably most appraisers out there, know what it needs to conform to.
Yes.
The next step up would be to the jumbo space,
Yep.
which have jumbo investors. So those are getting more into Wall Street type investors. They
Yes.
still have regulations. Kind of interesting as well, having worked at different lenders and even having different jumbo investors.
Yes.
Even that, I think it's still a pretty narrow requirement in that lane, but each investor has a slight variant of interpretation of that. As an appraiser, I could sit here and say, well, they say this. That's their interpretation of this. That was kind of
Hmm.
interesting. But still, you got that'd be the next leap up. After that, you get into private lending, really
Yes.
for investors. It's not your typical homeowner. It's not going to be borrower occupied. It's private money. A very much more internal type of transaction.
Yeah. Thanks for that explanation. It's one that people was having a conversation with another podcast guest, and he was mentioning how for a majority of his career, well, lending was primarily all. It was all that what they did, and now at this point, for the company he works for, he's like, I didn't realize how much non-bank lending there was, and how much they have needs too. And his firm, the firm he works for, is making efforts to really appeal to that because it has grown so significantly in really the last decade.
Yeah, I've only recently gotten into private lending myself, and same thing. And to see it is a big space, and what they do, what those investors do, by rehabbing homes. It's a lot of the fix and flip markets, properties that need rehabbed.
Hmm.
People that want to do it, and you have these private lenders that facilitate the funding to do so.
Yeah, I remember the first time I heard somebody refer to it as opportunity capital. They were like, "Well, look, if you're not a home buyer per se, when you're actually purchasing a property and your primary intention is to reposition it by improving it, and your exit strategy is to sell it, then the cost of your loan is probably, if it's a profitable project, it should be the least of your concerns, as long as you're not paying usurious rates." And I was like, wow, that's fascinating. It's- and there's a whole world of lenders out there that will step in and provide funding for those people that are in that space.
Yeah, and it's even if the rates, whatever the rates are, I think a rate's probably irrelevant at the point,
Hmm.
because they're it wouldn't behoove any lender for a borrower to default, for a homeowner to default, or for an investor to default. The lender wants everyone to succeed as well, because that's
Yes.
happy performing loan. That's the name of the game.
Yeah, yeah. It's they routinely told me back when I was a commercial lender, like we don't take an equity position. We make our money by earning interest on the money that we lend. It's all about getting repaid. That's
Yep.
all that matters. And I'm like, yeah, I totally get it.
Yep.
You're not speculators. It's like, no, 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 not at all, not at
And
all.
that's where it comes in. The appraisal comes into play for all that scenario is, they don't want to have a negative equity situation. It's
Hmm.
it's collateral for a reason, and they wouldn't want to make a loan to an investor on a property that would be impossible to complete, or you know wouldn't be allowed per zoning. If they want to renovate it to be X and it's not allowed, so therefore they couldn't even sell it. A lender wouldn't want to get involved in anything like that. So all that
Yeah.
information's necessary to collect and to have on hand to make the loan.
Yeah, that makes good sense. Definitely makes sense. So, I mean, given everything that you've seen and all the different segments of the industry you've been in, what are you looking forward to or optimistic about over the next 3 to 5 years?
Hmm.
You may not be, and that's
I
okay too.
I like change. I've moved into more in the private lending space, and even as consulting here and there, you know, quick little helps and fixes and things is great. But honestly, I think in the next 3 to 5 years, I think if you're, you can't be afraid of technology. We don't want to moan and groan AI because it's coming. So if people want an opportunity, it'd be to learn more about that and how they can contribute that way.
Yeah, no, that definitely makes sense. Definitely makes sense. Well, Greg, definitely appreciate it. Thanks so much for sharing your perspective. If somebody was interested in learning more about Industry Advisory Council or some of the other things you've been involved in, how could they reach out to you?
I'm on LinkedIn.
Sounds great.
Reach out that way. You can go to the foundation's website, has links for all those things as well.
Got it. That sounds fantastic. I definitely appreciate it, Greg. Thank you for your thoughtful reflection on a number of the different roles and responsibilities you've had over your career. And obviously you're not done yet, but it's always great just to see how, I started here in cars, and then I got into appraisal, and I've been in and around it and through different segments all the way through over these past couple of decades, and see what's really possible. So thank you so much.
Thank you, Michael.
And friends, please go ahead. If you haven't done so already, do what only you can do, and that is subscribe to the podcast and like it, and then share it, because only you can make that difference. Until the next time, have a fantastic day. Thank you again, Greg.
Thank you, Michael. Have a good day.
Thank you for joining this special subscriber-only journey through our bonus episodes of Amusing Perusings. These exclusive sessions let us explore how advanced technologies are revolutionizing real estate valuation and appraisal right at the center of industry transformation. Would you do something for someone you may never meet and that has no cost but has significant impact? Who is one person that comes to mind you can share this valuable resource with, who also values learning and growing, possibly even making a big impact in the real estate appraisal world? Please go ahead and share.